And there we go. Hey guys, it's Ryan Hoffman here at Wholesale Capital Corporation, your direct mortgage lender doing mortgages, new home purchase, investment property purchase, refinance of existing mortgages, and reverse mortgages. And one of the questions that have been coming up a lot recently is about cosigning. And I'm not going to tell you that cosigning is a great idea, because anywhere you go on the internet, you're going to find stuff that says you shouldn't cosign for people because it's a risk it's too big of a risk for you financially. But there's a lot of you that are going to make this decision anyway, because you want to help your family out, you want to help out your spouse, or you want to help somebody out, and that's noble, understandable, and fine. Now, there's a lot of questions that people have when it comes to co-signing for a mortgage, and we got to talk about that. So at least if you're going to take this step, you should know what you should consider and what you should watch out for and be aware of, and how it will affect you when you are co-signing for a house. So come with me on this journey. Let's take a look here. A few questions we should go through. You should know the difference between co-signer and co-borrower. When you co-sign on a mortgage, you are co-borrowing the money for the mortgage. You are both on the property as well, but co-borrowing is a special distinction because you are both 100% liable for that mortgage getting paid. It's not like if you co-sign, you're 50-50 responsible or anything like that. The person you're co-signing for, they have to make sure the mortgage gets paid, and you are hurt just as much for missing a payment if they do not make the payment. So you got to make sure and consider that, and know that when it shows up on a credit report, that's how it's going to show up. You have a full payment to make, and that'll be counted the full amount against you. Why do they need my help? Now, this is important to understand because when you're making your decision whether or not you want to co-sign for somebody, you're going to consider things like, well, if they don't have the ability to make the mortgage payment, why am I going to co-sign for them? There's a lot of really weird intricacies to the mortgage industry now, but one of the great things is that people who get a mortgage now cannot get a mortgage until they can, beyond a shadow of a doubt, prove that they can afford the mortgage. Now, the only reason you need a cosigner if you can afford the mortgage and your credit score is high enough is that you can't show enough documentable income. An example of when this might happen: if someone just switched from being a salaried position to a commission-based position. The general rule of thumb is that you need to show a 2-year history of commission-based income in order to use a commission income source. You need to show that it's stable. That could be an example. And when you talk to somebody, they may be able to explain, like, yeah, I've been basically commissioned this whole time. I'm doing the exact same job, and I'm actually making more money now, but because it's showing up differently on my paychecks, now I don't qualify. Can you help me out? Great example. If someone is, for example, I've got a family member who was a employee of a company. Then he said, hey, I'm doing the exact same work. I don't have to work underneath this guy. I can do all the work myself and be, 1099 self-employed, and I'll make more money, and I'm doing exactly the same job I was doing before. Great. You need to have a 2-year history in order to use self-employed income. This is an example where you look at the risk and the risk factors and say, oh, you know what, that makes sense. Maybe this isn't so much of a risk. It's just a weird little unique niche why they couldn't qualify. So that could be a reason why, and a multitude of other little things that affect it. But long story short, there are reasons why people need cosigners right now, even though they can't afford it and their credit score is high enough. It's just being able to document income with the guidelines that are available. Okay, there you go. Other things people ask, is my credit score going to be impacted? Only if they're late. There you go. Only if they're late. There's a whole bunch of documents out there you can find and see what's going on. But basically, if it's an installment debt, that as long as they make their payment on time, it won't negatively affect you at all. Now, the big thing that people ask for next, and you should consider, is will this affect my ability to buy a house or to refinance a house? It depends on how soon you're trying to do it. For example, if you are trying to buy a house or refinance a house within the next 12 months, yes, it will, because in order to omit a payment and this is only relating to a mortgage loan application, in order to omit the payment of a mortgage, you need to show that the other person or the person you're co-signing for has been making the payment on time for 12 months with no lates, and the money is all coming from their bank account. You have to be able to document that they're making the payment, and you have to show that it's on time. Now, for example, if one time they were a little late, a little behind on getting their paycheck, and they asked for you to front them money so they could make the payment, and then it went that way, that's a red flag, and it could be an issue. So if you go 12 months and they don't have any kind of issues like that, we document all the payments, you're good to go. Will not affect you buying at all when it comes to another mortgage. Now, if you are trying to do something in that time, what you should do, and what I would do in the situation, is that I would do all the math and say, hey, you could qualify with this payment, and a whole nother payment and still have no issues. So as long as they're not late and it doesn't affect your credit score, I can hit you with both payments and you can still qualify. That's something you can consider. So that's good. And also things you consider: how long are they going to have the mortgage for? Now, the reason I bring this up is because statistically speaking, people who buy their first houses are a lot of times the people who want help for co-signing. Most people who buy their first house only live in that house between 2 and 5 years on average before they outgrow it and they have to move to a bigger property. So you figure, hey, this is a newly married couple. They just need help on their first house. It's a small house, so when they have kids, they're going to move out of that. They're going to outgrow that, or it's a short-term thing. Then you have a conversation about it and you agree that it's just to help them out these first couple of years. And if they have trouble, they need to call you to make sure that there's no issues, because you need to be able to make their payment if they run into hard times. Otherwise, it could affect your credit score. So something to keep in mind. There's a lot of different variables we wanted to talk about. Let's see, overtime, 2 months, no issues, family and friends. Of course, don't co-sign for anybody if you have the slightest inkling that they're gonna be late or they're not responsible with making their keeping their obligations. I'm not going to pretend that co-signing is a perfect solution or a good idea to do in any situation, but if you're going to do it, be very, very, very careful and selective. Don't put yourself in a position where you're going to say, I should not have done that. Okay, that's it. If you or anybody you know is interested in getting qualified for a loan to see if they can make something, for example, if you've been asked to co-sign and maybe it seems like they should be able to qualify for a loan on their own, have them give me a call or give me their info and I'll give them a call. What I can do is give them another consultation and see whether or not I can get them approved without needing a cosigner. Happens all the time that I'm able to utilize income that other banks were not able to utilize, or I'm able to omit debt that other banks had to hit them with, or I have programs that will allow lower credit scores, and bing, bang, boom, you're good to go. That being said, you guys have a great day. If you have any questions, give me a call. My contact info all right here. If you're in Northern California, Southern California, Arizona, Texas, Oklahoma, or soon to be Nevada, I'm happy to work with you and answer any questions you may have. This is Ryan Hoffman. Phone number's here on the screen. You guys have a great day, and I'll talk to you soon. Bye-bye.